Good day Forex trader. Your USD Forex signal, no end in sight for sell-off. The pair will likely keep falling as bears target the third support at 1.1220. Bearish view. Sell the Euro USD and set a take profit at 1.1220, S3. Add a stop loss at 1.1450. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1385 and a take profit at 1.1450. Add a stop loss at 1.1300. The Euro USD sell-off gained steam overnight as the market reacted to the strong economic data from the United States. These numbers signaled that the economy is doing relatively well, which could force the Fed to tighten faster than expected. The pair dropped to a multi-month low of 1.1330, which was about 3% below the highest level this month. U.S. economic strength. The American economy appears to be recovering at a relatively faster pace. Earlier this month, the country's non-farm payrolls numbers revealed that the economy added more than 540,000 jobs. The unemployment rate fell to 4.6% while the wage growth accelerated. A few days later, numbers by the Bureau of Labor Statistics, BLS, revealed that the American inflation surged to the highest level since 1991. This happened as the cost of fuel and gas jumped sharply. The supply logjam has also contributed to higher prices. Indeed, more than 54% of all small companies have signaled that they will hike prices. And on Tuesday, numbers revealed that the country's retail sales jumped sharply in October. The headline retail sales rose by 1.7% in October after rising by 0.8% in the previous month. Core sales, which exclude the volatile food and energy prices, rose by 1.7% in the same period. This is a sign that consumer spending, which is an important part of the GDP, is doing well. Meanwhile, the export price index rose from 0.4% to 1.5%, while the import price index rose from 0.4% to 1.2%. In the same period, industrial and manufacturing production also did well. Therefore, the Euro USD is mostly because of the overall strong dollar. Later today, the pair will react mildly to the latest Eurozone inflation data. Based on the previous estimate, analysts expect this data to show that the headline CPI rose by 4.1% in October. In the past, these numbers tend to have no major impact on the pair. Euro USD forecast. The hourly chart shows that the Euro USD pair has been in a deep sell-off lately. The pair has moved below the 25-day moving average. Most importantly, it is approaching the second support of the standard pivot points. The Money Flow Index, MFI, which is similar to the RSI, has also moved to the oversold level. Therefore, the pair will likely keep falling as bears target the third support at 1.1220. GBP USD Forex signal, pound strong ahead of inflation data. The pair is trading between $1.3375 and $1.3475. Today's GBP USD signals. Risk 0.75%. Trades may only be entered before 5 p.m. London time today. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3473 or $1.3523. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3373 or $1.3319. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. GBP/USD analysis. I wrote last Wednesday that the only potential opportunity one saw here would be to trade from a bearish rejection of $1.3606. This was not an exploitable call as the price never got back to that level, but I was on the right track as the price fell sharply the next day, so I was proven correct to be looking to the short side. The Forex market right now is dominated by long-term strength in the US dollar, which has broken above key resistance to trade at new one-year highs, and weakness in the euro which is similarly long-term, and both are supported fundamental factors providing a tailwind. Given these factors, it is surprising that the price is holding up here, as you would expect the falling euro to drag down the pound, but this is not the case. The pound has maintained its value against the USD this week, while the euro and yen have fallen strongly against the greenback, suggesting relative strength in the pound exists. These factors suggest that if the bullish USD trend were to begin reversing, the price could rise notably here. However, a release of key British inflation, CPI, data is due very soon at the time of writing, which will be closely watched by the market as rising inflation is becoming a global economic problem. Annualized inflation is forecast to rise from 3.1% last month to 3.9% this month, and the market is already looking to an approaching British rate hike. If inflation comes in significantly above 3.9%, expect the price to spike higher and quite possibly break above $1.3500, at least temporarily. I think there is scalping potential from reversals at either the nearest support or resistance levels, but I see the greatest medium-term potential as a long trade from support which could then move nicely into profit when the USD finally makes a pullback. AUD/USD Forex signal, sell-off to intensify. The pair will likely keep falling as the market targets the key resistance level at 0.7200. Bearish view. Sell the AUD/USD pair and set a take profit at 0.7200. Add a stop loss at 0.7400. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7340 and a take profit at 0.7450. Add a stop loss at 0.7250. The AUD/USD pair declined slightly during the American session as the market reflected on US retail sales data and the dovish Reserve Bank of Australia. The pair declined to 0.7310, which was slightly above last week's low of 0.7280. Strong US dollar. The AUD/USD pair declined mostly because of the overall strong US dollar. The US dollar index, which weighs the performance of the greenback against a basket of currencies, has risen to the highest level since July last year. The strength of the US dollar is mostly because analysts believe that the Fed will adopt a more aggressive interest rate policy. In its recent decision, the bank announced a $15 billion reduction in its quantitative easing program. It also left room for more tapering based on economic data. These numbers have spoken. The economy has moved to full employment, which is defined as a period when unemployment drops below 5%. The recent data showed that the unemployment rate fell to 4.6%. Meanwhile, recent inflation data signals that the Fed was wrong all along. Earlier this year, the bank said that inflation was transitory and that it will move back to 2%. Recent data showed that inflation rose to a 30-year high. And on Wednesday, data showed that the country's retail sales soared in October. The AUD/USD is also falling after the relatively dovish RBA. The minutes published on Tuesday showed that the Philip Lowe-led bank believes that it will hike interest rates in 2024. This is against what most analysts are expecting. With Australia's economy doing well, many analysts believe that the bank will hike sooner than that. In Australia, home prices have skyrocketed to record highs while the labour market is tightening. Inflation has also kept rising. AUD-USD forecast. On the 4-hour chart, we see that the AUD-USD pair declined slightly in the overnight session. The pair dropped to a low of 0.7310, which is a bit below the upper side of the descending channel pattern. The pair has also moved below the middle line of the Bollinger Bands. Also, it has moved between the 61.8% and 50% Fibonacci retracement levels. Therefore, the pair will likely keep falling as the market targets the key resistance level at 0.7200. This price is also along the 78.6% Fibonacci retracement level.